Orthopedic funding is on pace to accelerate in 2024. What is driving those investments and what types of technology is receiving backing? I'm Carolyn LaWell. My colleague Mike Evers is joining me. We're going to use Ortho World Analysis to break down the funding rounds closed in the first half of the year and to discuss what that means for a full year outlook. Then we'll dive deeper into the subsegments and companies that are benefiting from new capital. Before we jump in, I recommend you subscribe to our YouTube channel for more orthopedic market analysis. Mike, let's start with what we've learned in the first half. We've heard from startups that it's still a difficult fundraising environment, especially for early stage companies. But after a slow 2023, you and I were both surprised to see more than 20 rounds of funding secured by the end of June. So at a high level, what does the data that you're tracking show, and what does it reveal about today's environment?
Yeah, thanks, Carolyn. But let me preface everything with the source for some of the data that I'll cite today. So for years, OrthoWorld has been tracking publicly disclosed orthopedic funding announcements. Recently, I went back to 2016 and I cataloged all of those announcements into an Excel file to be able to more easily measure and report on this part of the industry. And then where possible, I added a bunch of contextual information. So that includes funding amount where disclosed, the type of funding round it was, and the closest fitting orthopedic product segment. So what do all those numbers tell us about 2024? Well, so far through the first half of this year, we've had 21 funding announcements after having just 28 all of last year. Now, based on the cadence that we typically see for funding, we can expect about half or a little bit less than half of the funding to come in those first 6 months of the year. So if this trend holds, we're looking at mid to low 40s in terms of total funding announcements. Really, only the unprecedented market conditions of 2021 generated more activity. And why is that important? Because after 2021, things sort of fell off a cliff a little bit. We had rising input costs, market disruption, and we saw investor attitudes and priorities change more towards profitable growth and a direct line of sight to commercialization. But based on the spike that we saw in the first half of this year, it could be that some factors are giving investors a little bit more confidence. And those include the robust demand for technology in orthopedics, some emerging high growth subsegments in places like sports medicine. And finally, for the last maybe 12 or 18 months, we've saw really elevated growth rates across the market. So maybe that durable rebound, that durable recovery in the market is giving investors more confidence.
So now let's talk a little bit about what the funding is supporting. Spine has, right, a significant number of small players who are vying for market share. So spine just in general accounts for most of the orthopedic activity, and that is absolutely certain when it comes to funding as well. Outside of spine, though, what are the different markets that you're looking at?
Yeah, I'm going to pick two. First is enabling technology, which in going back to 2016 is the second most active segment for orthopedic funding, and it's accelerating. Since 2020, we've seen a 50% increase in activity for the enabling technology investments. The other thing is it's highly tied and synergistic with spine. A lot of these technologies are designed for spinal surgery, and spine is the 800-pound gorilla, right? It has the most worldwide revenue. It has the most product launches, the most M&A, and the most funding. So a really good segment to attach yourself to. The other one I'm looking at is sports medicine. As I mentioned before, attractive growth profile. Some of these startups are putting out and estimating eye-popping market estimates for their opportunity. Now, of course, we're going to take those with a grain of salt, but certainly there's a lot of untapped potential in that segment in things like regenerative medicine. So sports medicine, going back to 2016, is our third most active segment.
And then looking at the companies that announced they secured new funding this year, who are you watching?
For me, it's Bolt Navigation. I think it's increasingly clear, from my seat at least, that navigation is going to be the type of technology that goes mainstream in orthopedic surgery first, anyway. But when we speak to surgeons, we hear a lot of those same pain points, right? Where these technologies physically get in the way of the surgical team. They add a lot of additional cost and they require new workflows and they slow the surgeons down, um, adding time to the procedure. But both systems seems to check off a lot of those pain points. No disruptive footprint with their system. It's a lower cost. And they use iOS to drive their technology, which is very familiar to just about everyone in the world. So it really flattens out that learning curve.
I'm going to go with Restore 3D. Restore 3D is all in on patient-specific implants, which I think is going to be a really interesting trend to watch over the next 5 to 10 years. They are a revenue-generating company, and they've made notable acquisitions, including acquiring Conformis in their hip and knee products. But Restore 3D, they just closed their Series A to expand their 3D printing and software automation capabilities, which are really important technologies as orthopedic advances over the next few years.
Yeah, I think that's just a great pick and it really aligns with those new investor priorities that we talked about a little bit ago.
Absolutely. Well, we hope you found our insight on today's funding environment helpful. Our analysis of the market, as well as daily orthopedic company news updates on funding, commercialization, and M&A activities, is available to OrthoWorld members. If you're not a member, you can sign up by visiting orthoworld.com and clicking the green subscribe button at the top of the homepage. Also, don't forget to subscribe to our YouTube channel for more high-level analysis of the market. Mike, before you go, can you just leave us with a few takeaways?
Yeah, three quick points here that keep in mind for orthopedic funding in 2024. Number one, based on our conversations with people in the industry, still an extraordinarily tough environment out there to get funding. However, based on the first half of this year, we're on track for a near decade high in terms of funding activity. And even though spine remains the biggest and busiest segment in orthopedics, certainly in funding as well, enabling technology is really starting to close that gap.
Great. Well, thanks for watching, and we'll see you next time.